Make sure you join XM Live Education. The Tradepedia experts are here to share their knowledge with you in brand new sessions. On how to use exclusive technical indicators, you will learn how to use the following: moving average ribbon, Ichimoku Kinko Hio strategy, ADX and PSAR strategy, Bollinger Bands, Avramis River, combining indicators. Created by Avramis Despotis. Tune in every Wednesday at 2 p.m. GMT in XM's Advanced Room. Take your trading to the next level.
Smart traders never miss a beat. Keep your finger on the pulse of global markets with the all-new trading app from XM. Enjoy access to over 1,000 instruments, including Forex and CFDs on stocks, indices, metals, and energies. Place trades on the go with a single tap and benefit from instant order execution and no requotes. Take your trading to the next level with advanced charts and trading tools, and stay informed about the latest market movements with our expert news and analysis. Create, validate, and manage your account, and make deposits or withdrawals all in-app. Who says you can't have it all? Download the all-new XM app now.
Everyone can rise to greatness. Take it from one of the greatest of all time. Extraordinary stories are written with tenacity, patience, and passion. Build yourself up, one battle at a time. Rise and fall and rise again. Focus, find a right opportunity, and strike. Every win, every loss, every draw has led to this moment.
Rise to greatness.
Education. Here you have access to dozens of educational sessions that will elevate your trading skills and increase your trading knowledge. Get ready for an exclusive live trading session by our trading experts and tune in every day from 7 a.m. to 4 p.m. GMT to keep learning about trading with us. Enjoy the show.
Hello, good morning, traders. Welcome here at XM Live Education with a special. It's a panel discussion here about the ECB rate decision that is taking place today in January. 2024, the first interest rate decision of the ECB. Christine Lagarde is at least the same like already intention as our two traders here, which is Mr. Darek Dargo and Nenad Kerkes.
Nice
Gentlemen,
to
good morning to you. First question, how are you doing? Darek, maybe you can start.
Hello, Frank. Nice to see you. As you know, yesterday we would have a session together, but because I was traveling, Nenad was replacing me. And I was watching on my smartphone, and I said, I hope that someone will say that they miss me, but there was nobody was missing me. Yeah, people were very liked also Nenad and you together. But I hope that it's a feeling that nobody missed me. Oh, what's a pity. But of course, we know that each of us can make a good session. Uh, and regarding today's decision, yeah, we are waiting for this really important event. But my feeling is that because we don't expect any changes today, probably the market will be a bit disappointed, and maybe the volatility will be not so high as we would like it to be.
Yeah, that's it. Darek, of course, we were in thinkings as well with you, always on the travel. Maybe next time you should tell us that we should say that we miss you, then we say it as well. So then you have a good feeling.
I hope so. Please remember that.
We will.
That.
But good that you are here on board today, Darek. Really happy to see you. Nenad, how are you doing this morning? Full of energy as always, or how is it going?
Always full of energy. Always good, always great to see you guys. Yeah, I was replacing Darek yesterday. Pretty good. I mean, Darek is very popular. I mean, I know that people like him, and I try to actually multiply also what Darek was doing with trying to finding some trades, and it was pretty good. We had session yesterday.
Yeah.
It was really nice trading, and again, pretty good success from Megatrend Hero. But now we have a little bit different situation. We need to discuss potential impact on from ECB decision. So let's enlighten our traders a little bit of what we think about it. You will be asking us questions, so we will try to answer them the best as possible.
Yeah, I made it very tough for you today. I promise you.
Yeah,
I mean, you will be.
Well, Mr. Machine.
I tell you, you don't need a heating today in your rooms, because the questions will be making them sweating, these two guys today, and really giving. No, kidding. Of course, situation in Europe, in the euro area is like as it is. I mean, we are having now. I mean, we can. I have a few graphs here, and maybe we start with the situation that most are really interested in or are aware of as well. It's the inflation versus the GDP in the euro area. Let me say it that way. So inflation came pretty much down when we are looking at the euro area. It was last month a little bit getting higher again. But what is really concerning a lot at the moment, and I saw this morning as well a very frustrating news from ST Micro, for example, a European chip manufacturer in the semiconductor area. While all the techs are usually growing like crazy, they have 15% a drop in sales, and in the last quarter. So they had they are opening with -6% this morning, a gap down in their stock, for example. And this goes along with the GDP, what I'm seeing here in the euro area. Look at that. We had really a nice growth still back in 2021, 2022 even. It was fantastic. And now we are coming to zero, or maybe even a shrinking economy in the European Union, while the inflation was coming down. So maybe starting immediately with the very first question, how do you think a kind of neutral ECB is going to handle the situation that we still have an inflation that is above the target, but on the same time you see that the economy in the European Union is going to not grow anymore? Is your expectation they will be, Darek said it already, he does not expect too much changes today, But will there be something that they give hope to the European economy as well? Derek, what do you think?
Well, it's typical for the central banks saying that our decisions are data dependent. Data dependent, this is a kind of a key, just to, if someone asks them what they're going to do, well, we will do always data dependent. We know that the inflation is still too high in the Eurozone. And we see, for an example, yes, a few days ago, we had data from Japan. In Japan, the inflation is 2.6%. So they are very close to the target, which is 2%. Here in Europe, we still are far away from the target. And my feeling is that because high interest rates make the cost of money high, which makes that there's the demand for credits are falling, which makes the banks a bit nervous what to do with the money, where to invest them. Yesterday we saw a quarterly report from a German company. It's called CAP or something like this, as I remember, which is a big part of the DAX 40.
SAP.
SAP, yeah, SAP. It's a part of the DAX companies, and it has really about, I think, 10% of the
yes, it's a
very
very
share.
big company of the DAX.
And they had very good results. They crossed the demand for the services is over 100% higher. So maybe this is the first rosy information that the banking system and is trying to recover. So in my opinion, as long as we don't see any bankruptcies within the companies, the ECB will be a bit tight, and they won't just cut. I saw yesterday a poll made by Reuters. They asked 85 economists what is their prediction about the first ECB rate cut. Will it be in April, or will it be maybe will it be in June? And the results are very funny because there are many different opinions. 85 experts asked, and 21 of them say first cut will be in April, not even in March. Three only say March. 38 asked persons say it will be June, and 23 of them says that probably at the beginning of the third quarter. So you see, if 85 experts don't know what's going to happen, what can we poor boys say?
Exactly, I mean, it's always this uncertainty, nobody really know exactly when it's going to happen something, and this makes as well this nice speculation so interesting. So Nenad, what is your take on this one? Any change today? How do you see the European economy? I mean, GDP it's really coming down to zero. First positive signs, as Derek mentioned, with the SAP company yesterday. How do you see the situation if you look at inflation, GDP, and correlate it a little bit to the interest rate decision or the interest rate press conference what we see today?
Yeah, I can see the chart and I'm looking at it now. So basically, we already know that there is a variation of inflation rates across different European Union members. So it's not like European Union is having united inflation. It's different between members. And all those factors we need to mention that are contributing to those disparity levels, right? Economic development, industrial structures, dependence on energy sector, right? Fiscal policies, and all these factors actually, in my opinion, of course, require some sort of balanced approach. All right, because I don't think that European Union can come, let's say ECB policymakers can come with one size fits all strategy, because every single member state has different challenges. And it's very hard. I need to say it's very hard for ECB because they need to monitor all those inflation rates across member states separately and converging them towards the final target in a well-balanced manner. So this is why all of those, how many, 85 different experts have different opinions. There is no one size fits all. It doesn't exist anymore.
No.
I mean,
And this is the reason. This is the reason why they cannot agree on that. When they will stop doing, when they will be a rate cut or whatever. I mean, we don't know that. How can we know? Look, all of those member states have different issues. I was always saying European Union, it's a great, very good product. But look now, just take an example. I will need just to address this, what I'm saying, with a good example. Everyone gave ratification for Sweden, every member except Hungary, to join NATO. Now Hungary needs to get something from European Union in order for them to sign that Sweden will be another joining member of NATO. You know, so it's a big disparity, and all of them are different mindsets, different mentalities. And this reflects here also.
I mean, you know, absolutely. I mean, of course, you know, this is a special situation that we're having in the European Union, right? I mean, countries are coming together and having, of course, national interests and having as well like their national problems. They have to justify as well that their pricing in the country is going well, and so on and so on. And this is in the euro area, of course, like you know, a community more or less. And it's very, very logic, of course, that we have here as well a lot of like dispute, a lot of like different meanings. This makes the European Union as well, or the Eurozone as well, kind of slow, you know, because they have to debate a lot. There is no fast decision making in this very moment, because there is different interests as well. Yeah, but that's the fact as it is right now. And in terms of interest rate decision, you're totally right. And if we are looking as well into the past, actually, when we had high interest rates, like in a similar level, it was 2006, 2007 around, and also 2002 in this area. And it always had a certain kind of plateau, like it always took several cycles before they gonna drop again. So do you think the market is too euphoric at the moment for expecting a very fast like interest rate cut in this moment? Lennart, go ahead.
I can say no problem, because I have the momentum.
Exactly.
No worries.
You're in a trend. You're in a trend.
No worries. Well, you know, actually, very good question, and I think you are completely right about that question, Frank. And this is actually not just a question, but a statement. Yes, they are too much in hurry for that. So basically, what I say, we need again to differentiate some things before we explain this question. Not all traders are actually from economic backgrounds. So what does it mean, high interest rates? Why is it dangerous, and why is it not good for loans? Because it discourages borrowing, right? As the cost of loan will increase, and that will in turn decrease demand for loans, right? And it implies reduced consumer spending and business investment. That is the conclusion. And the final outcome is slowing down of economic growth. So this is why they are maybe in hurry, because we know that companies will start planning on investments, let's say, if the inflation starts to drop. All right. And lower interest rates definitely can help control this environment. Well, whereas high interest rates can help curb down the inflation. So this is the balance that I'm talking about, and this is the balance that probably economics and SEOs of companies are watching. They are in hurry because they will have more business opportunities then, if you get my point. But is this artificially created hurry, or it's really backed down by data reports? And this remains to be seen, because we still need to have all those data reports until April, March, or whatever. I don't expect myself that they will cut rates probably before. I was inclining towards March and April, but I still need to see for me, it's either March or April. This is what I'm not sure. I'm not sure about June, and because they are in hurry, as you
Absolutely.
said. So they need to do something. We talked about it, balance. They need to make balance. Prospects of business versus higher inflation.
Yeah. So I totally see what you are saying as well. I mean, there is like this kind of feeling of the hurry, but on the other hand as well, it's sometimes good as well to let things settle a little bit before changing too much too fast as well. So Darek, how are you seeing like the speed and of changing something of the market expectations as well? I think the market is very euphoric already about to see this this change, this drop again of the interest rates. Do you think the market is a little bit overdoing it at this very moment?
Yeah, in my opinion, the market expectations for the ECB cutting the rates is much too aggressive. So I must say that the market is trying to press the ECB to do something, and ECB doesn't want to do it because they know that the inflation is still too high. But I would say something which probably will be very not popular, especially for the Greenpeace and all this type of organizations. My opinion is such that the problem starts not because of the what is ECB doing, what is the inflation, and everything starts from that Europe is at the moment, especially the Eurozone, is so focused on green energy.
No, yes.
Which is absolutely, it's driving up the production costs. And especially the environmental charges, the CO2, and so you have to pay for everything what you put to the air. Those charges are the highest in the world. So production of European companies are not competitive anymore. The cost of production in Europe are so much higher than the production in China or in Brazil or especially in United States, because the charge which you have to pay for the using the environment are so high. I know it's not popular because we should save the environment. We should have clear waters and clear air. But if we take a look at the world, in Europe from 2025, for an example, in Norway, you cannot sell any more cars with traditional engines. Only electrics will be sold. But remember, Norway is a country where the winters are very long. And sooner or later, we'll see that they are not able to produce, and we will have only electric cars to use, because when there'll be -20, their cars will be not driving anymore. They'll stop in the snow and wait for sun. It's crazy. We are going forward too fast with this green energy. This is my private opinion. But if you compare, Europe is the emission of CO2 from Europe is about 5% of this what the whole world is doing. So changing the cars to electric, will it really save the world? No, it will kill the economy. This is my opinion.
Exactly. I need to agree with Darek on this, because I'm against it. Just a quick notion. I've been always against these kind of. They're hurrying also that too much. For example, one member of Senate a couple of months ago in the US said, we don't even have charging stations. How do you think that we can actually employ full electric vehicles in our country? We don't have anything. Infrastructure is missing.
And you need,
you are right,
you need lithium to produce the batteries. There are 2 or 3 countries which are producing lithium, and most of them, they are in the hands of Chinese industry.
Yes.
So we are shouting, we cannot be dependent from oil and gas from Russia. We cannot be dependent from Chinese semiconductors. But we are doing all the best to be dependent to China, producing electric cars.
Yes.
Someone is really not thinking properly, in my opinion.
I mean, that's really that I mean, of course, I'm as a moderator here, I'm staying neutral on this question. Of course, you know, this is absolutely
Oh,
clear.
I'm
And of
driving a
course,
bike. I don't need any energy, you know.
you know, but it's interesting because just this morning, I think it was this morning or yesterday morning, I don't remember now anymore exactly, but I think it was this morning, I read exactly an article about the German fairy tale of green economical growth. It was the headline of this article, honestly speaking. You know, this kind of fairy tale storytelling that we have, like the green economy wonder, and there was a lot of professors were talking about or writing about that this whole shift to this green economy kind of thing, it will cost Germany still, only Germany, not even speaking about Europe, Eurozone or 1,000 billions of euro to get the infrastructure of just bringing up the windmills, bringing up the photovoltaic solar panels, you know, to create the energy, will cost them still 1,000 billion of euros to establish that. And by that said, you know, you are hitting there actually a point, because this is going directly into the cost of production of the companies, and this is also like what is scaring, what is really scaring a little bit. You read from companies that are kind of, you know, like traditional companies, for example, that are producing silicon for the semiconductor industry. It's a company in Bavaria. They're still producing the raw material for the semiconductor production. They're not able anymore to compete at all with the raw material coming from China and everywhere, because, and only the reason is only the energy cost. It's only the energy cost, because they're so high meanwhile that they just cannot produce anymore. And of course, nobody buys the raw material from them anymore, because of course they get it much cheaper from elsewhere. So established companies in Europe are going to potentially go away, and maybe it's not about the inflation. It's really you are making really a point there, actually, I have to say. Yeah. But interestingly though, let me lead a little bit to the news what we had yesterday. This was kind of optimistic, I have to say. We had yesterday the manufacturing PMI of Europe, and the manufacturing PMI, when we're looking at it, you know, it is the purchasing managers are giving, like, just for getting it a little bit explained to our viewers as well, purchasing managers are giving an outlook in their companies, how the order books are looking like, and how, you know, how they are seeing the future for the manufacturing. And this seems to found bottom, actually. It's turning around, it's getting better. It's still below 50% is the threshold for positive or negative outlook, right?
Yeah.
But it seems like we found a bottom, and so there is also some positive signals in the European Union or in the euro area. So would you say this is the first signs as well that Europe, maybe that we are seeing it too dark at the moment, and there is a little bit of light on the horizon?
I must say that I don't think that one. We have a saying in my country. I don't know if it will mean the same, but the first bird is not a sign of spring, you know. So it might be only, you know, a problem of making the statistics. Maybe there's the numbers. The numbers, they say the numbers don't lie, but the people who are using those numbers might have a bit, you know, something below the skin. No, I don't think that this is something very optimistic. For me, what I feel is optimistic when I will see that the inflation will be about 2%, and I will see that my energy bills are falling. This will be optimistic. Because as you said, energy is a big part of the cost of the companies. And when it's high, it will be high. Producing energy by the wind, from the wind, and from the solar batteries, or how we call it, solar panels, is double the cost producing the energy from oil. That's the truth. Before you produce those panels, you need to spend a lot of money to do them. You need to import a lot of raw materials to produce them. You need silver, you need lithium to produce the batteries. And those things are making euro dependent from other regions. So saying that we want to be independent from other regions in costs of in production of the energy, it's a big lie. Okay, do you have lithium to produce batteries? No. Do you have oil in Europe? No. Do you have gas in Europe? Maybe in Netherlands. Yeah, this is the biggest producer of gas. But we are still dependent from other countries, from other regions. And as long as we will be dependent, they will dictate the prices of energy in Europe.
That's true.
Yeah.
But that's true. I mean, Darek, you are completely right. That is why we have Poland there. I always have faith in Poland, like the biggest country in the crossroads and the country that had the biggest investments from the US since 2000 and maybe even before. So I hope that maybe Poland will be maybe changing the situation slightly. At least I always say everything that I see, we are importing a lot from Poland here. And Poland is one of the countries which can be one of the, or if not most developed country in European Union.
We have
Sheer number of investments. Look, Darek, I know you live there, but I'm also following it. And I can see at least where I live. I mean, every good that we import, it's usually from Poland, you know. So it's the center of European Union. Right, exports, imports.
yeah,
A
we
huge
are selling a
manufacturing.
lot to Germany also. I
Oh,
know that.
everywhere. Yeah.
Yeah, you see.
No, this
But-
was also established a lot of manufacturing hubs in Poland, right? I mean, there is that. I
Yes,
mean, Poland
exactly.
is also like in the automotive industry. There's a lot of manufacturing hubs in Poland which are delivering parts for Skoda, for Volkswagen.
Automotive
Yes.
things.
Yes.
There are few companies which are producing the whole equipment for Volkswagen, the bus T4. It's nearly 90% Polish production at the moment, but it's sold
Yeah.
as a German
But you see,
car.
and my Sony PS5 is also imported from Poland. So
Yeah, it's produced in Poznan, as I remember, or something like that.
you see, and now we are coming to the point what you said. So is PMI improvement and let's say strong performance in some tech sectors, I don't know, SAP, ASML, is it enough to signal a robust economic growth? I think that despite all of those positive indications that we have from the PMI, other sectors will also need to be monitored, and broader economic challenges will still exist, as you say, in European Union. What is the biggest one? Geopolitical uncertainties. And because of those geopolitical problems,
That's true.
they are cautious because of that. It's not just let's produce this, that, and we will improve PMI. No, it's geopolitical, very sensitive geopolitical situation. Where is the most sensitive geopolitics in Europe? There in Poland, where Darek lives, because it's at the crossroads. And you see what is going now with Sweden, with NATO, with Russian threat, right? So this is this geopolitical answer that Europe needs to make, you know, to step out. And everyone now is waiting for US elections because many of those broader signals will be signaled after the US elections this year.
The question is who will win.
Mark my words,
The
what I'm
question
telling
is
you.
who will win.
Yeah,
Yes, exactly.
That's really like a big topic as well, which we have later on this year as well, the US elections.
We will discuss
That's
yes.
absolutely a
November,
very
yes.
big topic actually, and you see as well that
Very big, yes.
and it's not only, and this is also like a big thing, you know. You say geopolitically, this is one thing. You are totally right. I mean, there is no solutions in sight. But what also you can see, not only in the US politics, but you see it as well in the European political
Yes.
landscape, there seems to happen at the moment a big shift actually, right?
Big shift.
I mean,
yes.
this is not only like we saw it in the Netherlands to happen.
Look at Germany
we look
now.
into Germany. Germany is going. I'm really surprised what's going on in Germany at the moment. I mean, this is I'm
right wing is
but this is actually, honestly speaking, it's like this is what is transported through the media. You have to be really careful about it, because what I have to say is that in Germany, there is a lot of forces at the moment that are trying to put everything into the right corner, which is not following the politics at the moment. So this is, I have to really very honestly and clearly state, because when you think about that, at the moment, 1/5 of the Germans are not selecting the main parties, which were which were theirs. They're selecting a more conservative party. You cannot call 1/5 of the country that they are Nazis or no, and this is what at the moment is going to happen. And this is, in my opinion, very, very dangerous for the political landscape as well in Germany, because people are starting to get really unquiet. Germans are not known for a lot of demonstrations, but I think slowly they're getting so angry and unsatisfied with what's going on and how they're kind of light on.
Mr. Schulz
Yes.
is not no more laughed.
No, not at all, actually. No, I think he's the at least
main enemy now.
I would not call him as the main enemy, but he has a very arrogant appearance towards the people, and I think this is something what, of course, as well is what he feels. Meanwhile, I mean, you have to think about, he lately made a TikTok video where he was answering the question that he eats rather mayonnaise than ketchup with French fries, while in Germany hundreds and thousands of people are going to the street, he answering questions if he rather likes mayonnaise or ketchup. I mean, this kind of arrogance you would have to have as a chancellor. But bringing it back to the ECB this afternoon, I mean, seeing geopolitical things, seeing the political landscape in Europe, in European countries, in European Union shifting into a complete different situation, thinking about what could happen in the US with the election of the president, and what does it mean for the euro? Is it something like that the European Union as well might be, or the euro area might be at a state that it will be challenged if it can keep together at all? Or is it like something a little bit too far ahead thought, like that everything is kind of breaking away? But
what do you see that we are leaving the Facebook now and the YouTube.
Yes.
So let's say thanks guys for watching us and join us on this education sessions we have every day from 7 to 5. Nice sessions in beginners room. We have advanced room like this one. So guys, don't forget about us. Join us.
Exactly.
There.
Join us over. Let's invite you, xmglobal.com. Come into the advanced room and follow us with the next, the last part of this panel discussion. See you there.
If you enjoyed this live show, you can watch many more for free. Head to xm.com, choose from a wide selection of educational sessions to improve your trading, learn more about us, and ask questions in the chat room. Join us online in the XM Live beginner and advanced rooms every day from 6 a.m. to 3 p.m. GMT.
Everyone can rise to greatness. Take it from one of the greatest of all time. Extraordinary stories are written with tenacity, patience, and passion.